Have you heard of the financial law of gravity? Probably not, because it is one of Wall Street's best kept secrets. Why? Because the biggest trading firms in the world use it to make a fortune. It's also how I doubled my money in just 67 trading days. Interested? Want to find out more? Want to get in on the action? Click the button right now to join me and find out how I did it.
How did he do it? Click the button now to find out. Makes sense. Fairly easy. But right now we're going to be hanging out in Power Profit Trades with Tom Gentile, bringing this man in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades. It is Microcurrency Monday. It's also the 1st of August. So, hey, less than 5 months before Christmas. Better start that shopping now. Before then, however, though, guys, we got another week of what we call the sweet spot in earnings. We've got, what about the fallout from the Fed last week? What about the big tech earnings? What about the chips bill, which has been driving the semis up to start the week? Again, how long does all of this end up lasting? Well, I'm going to put a lot of that on hold until tomorrow. We are going to do a full review of the overall markets, but I'm not going to get into individual stocks today, all right? Today, I'm going to do something that I haven't done in a while. I'm going to talk about cryptocurrency. I'm going to talk a lot about Bitcoin. I'm going to talk a lot about Ethereum. And more importantly, I'm going to do something for the community here that we did a couple weeks ago in our microcurrency group, with our microcurrency group. Not as much. I'm going to take a sliver of what we did in our microcurrency trading room, where we talked about the mid-year report. Those of you that are part of Microcurrency Trader, remember we talked about the mid-year report. We talked about why we believe there was a bottom in Bitcoin and Ethereum, and the next catalyst, the next long-term catalyst that was going to push this thing higher. Well, I want to share a little bit of that with the entire community today. So that's my plan for the next hour. We got a lot to do. You'll get my thoughts on Bitcoin, Ethereum, the overall markets, and much, much more. Eric, how was your weekend, my man?
Hey, what's up, Tom? The weekend was good. I moved, so the weekend was busy. Lots of work with the move, but all is good. I'm happy. We're set up.
Man, are you in the same, you look like you're in the same studio.
No, I'm not. I have quite a bit of work to do here, but the tech is all set. We just have to make it all look pretty. Got everything set up yesterday. But yeah, I'm good to go.
The house?
Oh, the house
is
great.
The house, man?
I wouldn't have moved into a house that wasn't nicer than the one that I was already in, so I'm happy. It's all good. And I'm excited about all this crypto talk. Things are looking a little bit better. We have some things to look at today, so I'm excited to hear what you have to say about it throughout the show.
Yeah, cool, man. I do miss upstate New York in the summer, and I'm not going to get there this summer. My wife and I are planning some stuff. Once she's back 100%, we're planning on doing some stuff, maybe going out west a little bit here before the cold season starts. So, but I'm going to be there next year. So I'm going to come see you, see you sometimes. I might even be there in the fall.
That's the best time. All the trees are changing.
We got more grandnephews and grandnieces being born, and so I'm going to have to get up there right during the fall foliage.
You're more than welcome to visit if you're ever up my way.
Awesome. Maybe we can do a show live together right there in your broadcast rooms.
That does sound fun.
So, last week we had that 75 basis point rate hike. Everybody was holding their breath, waiting for the markets to really dive. There was someone in the room, and I wish I remember who. And if he's here right now, he's going to let me know who he was. Remember, we talked about where we thought the markets were likely to go after the rate hike, and most people said down, but there were a few people in here that said up, and one person in particular said it's already built in. That number's already built in. And I had mentioned that, yeah, that's a really good point. Number's already built in. We did get that 75 basis point hike. That was the one that we felt, between 25 and 100, it was all over the place. That's what we felt was going to happen. That's what did happen. But we've had a big monster rally since then. And just not only that, but we've seen some extensions to that rally. And I believe a lot of that has to do with the CHIPS bill getting through the House. And so, that's exciting. It's now heading to the president's desk. We'll get into that in a moment too. But I mean, the month of July, wasn't that? I mean, this is the best month on record for the year. I would say, I mean, look at July. July could have possibly pulled us from the clutches of the bear market. So, a couple other things to mention. We had all of our major tech companies report last week. Apple, Amazon beat projections, and it even, if you look at Amazon's losses, Eric, I don't know if you had a chance to look at the details on Amazon. You know where their loss came from?
Where's that?
It wasn't labor. It wasn't gas prices. It was that big investment they made in Rivian. If you take a look at what happened from Rivian stock from the investment to where it is now, and you look at what they invested in, their loss, the majority of their loss was in Rivian stock dropping. So that's part of the reason I think Amazon kicked up so high afterwards, because a lot of people saw that and said, this is just an investment. It could come back, but it really is not their business model that dropped as much as everyone thought. So that was a big one. So with all of the FANG out of the way, and most of that was heading higher. Was it last week, Eric? Did I or did I not take a trade on Microsoft last week?
I believe you did, Tom.
I did, and I took it off and made money. And I also, I'm bullish on all those FANG stocks except for Netflix. Netflix, I'm actually net short on, and I'll let you know I'm down on that one. But that's a I try to do a little bit of a long short of things. I don't like to get too deep on the bullish side or too deep on the bearish side. I don't like to be too much of an option buyer or too much of an option seller. I like to sprinkle all of that in and let the spreads, let the portfolio work its way up. So have a good day. Had a great week last week. Had a great month, and hopefully continue to do so. Now, we'll move into cryptocurrency here in just a moment, but we talked about the semiconductors. We've got that bill. It's heading to Biden's desk. This is important, guys. This is important, and there's been a lot of reporting on this. That is the chip sector in a welfare state? Are they now the new? Do we have corporate welfare happening? And I think about that, and it's got me wondering. Because I look at both sides of this coin. We got to keep companies like Intel in our borders, because right now Intel is the only chip manufacturer that I know of that manufactures right here in the States. And so part of this was a play to keep Intel in the U.S. Now, politically, it was all about jobs. It was about adding this money to the technology sector for jobs. But I believe it was also, a ploy to keep Intel and a few other companies right here in the borders. Now, we saw the news for this new bill. It's not going to save negative growth. Intel had some big negative growth last week. I'm not going to sugarcoat that one. When you miss on the top line and the bottom line as big as Intel did, and had to have your CEO on mainstream media to kind of explain themselves, then there's no reason why. There's no surprise that stock dropped like it did at the end of last week. So I think that we're going to continue to see volatility. I think we're going to continue to see uncertainty in stocks like Intel, although Intel did get a bump up today. Snap is another one that, a couple weeks ago, we saw Snap get snapped by about 25% in one day. That's still sitting right around the area, maybe even a little bit lower than their earnings suggest. So still a lot of volatility in the markets. Let's talk a bit about how these assets are looking as we come into the 1st of August. And the ones I want to look at are stocks, bonds, currencies, commodities, and we'll start. I got Google on the screen, but I'm going to get rid of Google. I want to start with the Qs. So here's the Qs. And I'm going to make this as simple as I possibly can. I want to get rid of everything on the chart with the exception of, let's go ahead and even get rid of the IV. Although the IV is important, I want to just walk back And let's take a look here at what's gone on in the markets since, we really got to go back to 11/21. I'm going to bring this out a bit because this is the all-time highs that we saw in the QQQ. And then we had a pullback that pulled us all the way back until March. We had a March run up, and then we pulled back since then. The longer term to the high, I've got this on the screen for the reason that we're going from all-time high to pullback low that happened in June. Notice what's going on with the Qs here, Eric. We started to get a bit of a run where we're getting what I like to call higher highs and higher lows. So the stairs are starting to climb. And we have climbed from 271.39. Let's get in there and look at it. We've climbed from 271.39 all the way up to, we're getting close to the 322 area of resistance. Now, this is a very interesting resistance area, and the reason why it is because that represents that 38% retracement off the bottom. If we are going to have a new rollover and move back down again, I think these areas right here, the 38 and the 50, are where it's likely to happen. Somewhere between 322 and 337, we could potentially run into resistance. We get above 337.69, and it's very likely that even if we're in a recession, even if the economy is flipping over, stock market's already built that in, and it's looking forward to 6 months. It's looking forward to even the last 2 years of the Biden administration, because what typically happens in the last 2 years of a presidency? All right, the current administration starts giving things away, starts creating that I don't want to call it illusion, but the back half of a 4-year election cycle is the giving half. That's the part where, people have short-term memories, Eric. I don't know what I was doing last week, last month, last year, especially with COVID. I can't remember anything past the beginning of 2020. But what we do remember is what happens in the short term, and that's what people are going to be thinking about. Now, we're coming up on November elections here in just a couple of months. And I think what's happened this year is going to weigh very heavily on voters' minds as they go to the polls. But what is going to happen in the next 2 years as we come up to the election in 2024? Well, I think the next 2 years are more important than the first 2 years because, again, people have that long-term or what we like to call a short-term memory loss, all right? Long-term memory loss. We'll worry about what happened lately, not what happened years ago. And I think that could be a reflection of where the markets are going. Let's take a look at the next one. This is SPY. SPY actually looks stronger on the chart. If you see, it had its high in December at 477.72. Its low, you know what I'm missing, Eric? And someone just pointed it out to me.
Yeah, your mouse.
Big red mouse. I just saw that. So thank you for those of you that brought that up. Let me find that big red mouse. It's going to be
Clifford
in my list of there it is. My list of applications. And there we go. Clifford, the big red mouse, is back. 477.72 on the SPY, all the way down this low of 365.82. But again, let's zoom in and see what's going on. What's going on is we've gone above the 408 mark, that 408, which is the 38% area of resistance. We blew right through that Friday. We blew right through that again. And now that might actually become a support level. Next area of resistance, well, you've got a 421.77 level right here on SPY. We get above and close above that again. And there's a good chance that's going to happen because look at this cluster over here, this cluster of resistance, or this cluster of the markets going nowhere before the big drop. That big drop occurred, drop. And then literally we put our bottom in within a week after that. Kind of triple bottom down here in this area. But look what's been going on in the last couple of weeks. We've been moving higher. Money has been flushing into the stock market. We know where our next levels of resistance are likely to be. We see that as well. Let's take a look at let's look at IWM. So IWM, that's the Russell. That is the small cap index. They actually got to go all the way back to 1111. You see the highs at 239.49. The lows down here below 165, and then the rally since then, not anywhere near. Well, it's close, but it's not close like the Qs, and it's definitely not close like the SPY. But it too has had that higher low. That higher high, lower high rally that's happening. All right. Moving into bonds. So TLT, one interesting thing that we've seen happening really for the last year or so is that the bond market and the stock market have been moving almost lock and step together. Bonds had highs right around the beginning of December. Looking at the chart, the high was at 154.35. This is for TLT. This is think of it as a bond ETF, because that's what this is, all right? You can trade it in your stock account. Well, the bond market got crushed, came all the way down below 110, and it too is starting to move, but it's nowhere near its 38% retracement at 126.21, or its 50% retracement at 130.158. I think the only way this goes higher is if we indeed take a break from interest rate hikes. Right, we take a break from that. If we truly see, and we really are seeing it, where when you look out there, right? Yes, gas prices have come down a little bit. I don't know, Eric. We've seen about a 20% drop in gas prices.
Yeah,
about a 20% drop in the last month or two. How about you?
Same over here by us. I think we're all tracking the same. We may be a little bit higher than you are, but still, it's definitely going down. I'm happy. I feel better driving.
Yeah. I know. I gotta. I mean, when I look and when I'm looking at vehicles, I look at electric vehicles. Okay, so at the end of the day, you're still that isn't free. A lot of people think this electricity is nice and clean. It's not clean. Some of it might be clean, but some of it's quite dirty. But here's the thing: it costs money, right? And so you have to, we factor that in. You factor that in when you drive an electric vehicle versus gas, but it's still cheaper to drive electric. Problem is, electric vehicles are much more expensive than your average gasoline guzzler. And so, we think about that. So price of gas is down. All right, what else is down? Well, guess what? Real estate's come down a little bit too. Have you seen that, Eric?
Yeah, like I said, I just got into the new house, and I think I bought and sold being good, but at the very peak of the market, and it's definitely settling down a bit, which is good as well, but it's definitely happening.
Yeah, we're seeing it settling down here too in Florida, and here in Sarasota and the Sarasota Manatee County area, we have the number one. Let me see if I say this correctly. Number one planned community in the country. All right, they're constantly hyping that up. So that's a lot of people are moving to this area because of that. But even the prices, what we've seen is the prices start to come down. And if the prices aren't coming down, I can tell you what's going on. You look at Zillow, you look at Realtor.com, and you're seeing houses that are on the markets much longer than they were 6 months ago. So that those days of buying over market, they're gone. They're gone as of right now. So that's all kind of equating again into this. Even if there's a pullback, in order for this uptrend to continue in the bond market, we're going to have to see a little bit more of that. But also, you're going to start to see layoffs. I think we're seeing some of the tech companies, and especially companies like Amazon, that are already talking about layoffs that are going on because they're now they're trying to project what's going to happen 6 months out too. But you know what? Layoffs do good things in the stock market. Number one, I mean, what's the win? The consumer wins because now we're going to be able to see things ease off a bit. Some people are going to have to relocate their job because they might lose their job. But at the same time, for those of us that are stock traders or even investors, that ends up helping the bottom line of these companies. All right. Moving forward, UUP. Let's see what's going on with the cash market. Cash market had a really big rally, and I'm using longer term charts here, guys, because I want to show you the big picture today. The big picture is, where have we gone? All right, we were down here at 25.5 and we went as high as above 29 before pulling back. The US dollar, I expect to continue to pull back as we're now creating this series of lower highs, lower lows. 27.65 to 27.23 is the area that I see the dollar pulling back to. The June lows is where we see this going. This thing moved up from June to July so fast. I expect it's going to drop almost as fast to the downside. That's UUP. Let's take a look at oil. So in the area of commodities, we see oil that, back in December, USO was trading in the 40s. It nearly doubled in a time span of about 6 months. You see that from December to June, high 40s to low 90s before starting its series of higher lows and higher highs. And what's going on in the oil markets today? No, that's not the area you want to look at. Here's what you want to look at today. Oil is down. Oil is down about 5.5% today, guys, even with the markets up. I looked at the markets this morning, we were down. And within really right after the market opened, call it 9:45, things hit their bottoms and started moving higher. However, oil wasn't one of those. All right. When you look across the area of commodities, it's hitting energy markets are taking a little bit of a hit today, oil. And then there are some commodities that are taking some hit too, like corn and soybeans, for instance. This is something that we talk a lot about here at Monday Morning Live. But if you look at commodities like corn, down 3.5% today, soybeans down nearly 5% today. These are they're just pullbacks from huge run-ups that we've seen, not just happening in stocks and in the markets that we look at like USO. Here's USO's pullback today, trading around 75.22. This is an area, 74.82, as an area that's a 38% retracement. We hit through that already. We blew through that last week and took ourselves right down to that low of right about 69.5. That's going to potentially be a double bottom where oil may gravitate back to. I would say any close below that, and then we're going to start the bear market. We'll actually start the continuation of lower highs, lower lows, and it would make sense if you think about what I talked about a few weeks ago, that the seasonal high in oil is in July, okay? And we did get a seasonal high. We were around mid-80s in July. Here we are in August. We're back down to around mid-70s. When does oil start to seasonally gravitate higher? That's not going to happen until after the new year. So we've got months of potential lower moves seasonally lower in areas like commodities, and really more so in oil than anything else. All right. Look at UNG. UNG is a little bit of a different animal. UNG had a low back at the beginning of the year at 12. This is the ETF for gas, for natural gas. The high was 31.73. So we nearly tripled that move in 6 months. Then from 31.73, that got cut in half in a matter of a couple of weeks. A couple of weeks later, we were back up near those highs of the year. And what's happened in the last 5 days? We've gone from about 32 down to 27. I mean, if you like volatility, folks, this is where the volatility is. I mean, it's not even in the cryptocurrency market lately as much as it's been in United Natural Gas. All right. So there you go. That is UNG. And let's take a look at two more charts when we look at all of this overview. What's going on with gold? Gold, and more importantly, GLD, has had a very interesting move off that 158 level. I talked about this 158 level a couple of weeks ago, but I'm also going to say that gold was in a coma. I said this too. It was in a coma that we were going to need to get above 160 or below that 158 level if we were going to see it wake up. Well, wake up it did, because last week, and if you look in here last week, let's back it up. Right outside the middle of the week last week, we had a nice little jump above and we closed. We followed that with a gap, and now we're getting what's called a runaway gap. A runaway gap is where we gap up and we run away from recent prices. And that's what's happening right now with GLD. Where's GLD likely to go? Well, if the runaway continues, I've got to look up here in these areas where we see resistance. And that's really about the 170.83 area. So if we're at 164.85, there's a very interesting reward to risk ratio here, about a 1-to-1, where if you're sitting at you're sitting close to 165, you could look at 1-to-1, buying it at the 165 current levels is at, looking at getting out just above 170, or putting a stop just below 160. And that could be true for the ETF itself. That could be true for options on the ETF as well. All right. So that is GLD. Let's finish out this, Eric. Let's finish out our stock market with I want to do VXX. I don't have it on the list. I'm not sure why, but let's put VXX up on the screen. And I want to look at VXX two different ways. First, we're looking at it all the way since November 11th. Now, November 11th in that November area right here. This was in conjunction with the all-time highs of the majority of the indices. Had a little pullback, then look what happened. As we got into, we had all-time highs at the end of the year for the Qs. VXX came down below 18. 1763 was that low. From there, the market had its pullback. We moved into bear market territory. And as we did, the VXX, the volatility index, moved quite a bit higher. So we went from 1763 to 2973. That's a double. Almost double topped it once again in April. But since then, we've been creating the series of lower highs and lower lows. Where are we at now? Let's take us from 180 days down to 30. Take a look at the last 30 days. You can see what's gone on. This thing has gone down now. It's trading around 21.5, but we were at 25 in the middle of June. Middle of June to the end of July, we've seen a drop off from around 25 down to around 21. This is a 20% drop in options premium, a 21% drop or a 20% drop in implied volatility. So if you're long options, if you're long overall calls and overall puts, all right, if you were on the call side and you were in the buy and hold camp, you made a little money, all right? But if you were trading straddles, if you were trading put options, right? Some with rules-based trading strategies, then volatility might have got you. All right, so what happens with volatility as we go forward into the rest of August and September? Okay, seasonally, what happens is this. August is typically a month where we continue to see a drop in implied volatility. The markets could continue to rise into August and into Labor Day. Now, after Labor Day, we start to see a kick up in implied volatility, and we also start to see a kick up in market, not just market volatility, but a drop in potentially the indices. So we'll worry about that in September, but potentially we could continue to see this lower high, lower low happening in implied volatility as we head into, which is one of the most boring months of the year. And I'm talking about the back half of August. We still have earnings reports that need to come out. The retail sector as a whole is yet to report. That ought to be real interesting. But if we can get through that pretty much unscathed, and if Putin and what's going on over in Russia and Ukraine can, maybe hit page 3 of the news and stay off the front page, then we're likely to see the stock market continue its rally into those resistance areas that I discussed. What were they once again? If I were just to take a look at the indices themselves, we've got 321 to 337 on the Qs. We've got SPY, which is really 421 is that next area on SPY. And IWM. Well, IWM is going to have to hit that first spot. It's hit at 187.36, but 187 to 194. So we are expecting potentially those resistance numbers, the markets to gravitate toward those resistance numbers for a number of reasons. One of them is we're heading into what is considered as the most boring month of the 12-month cycle. All right, Eric. So where do we go from here? Well, folks, I want to take a look at the crypto markets, but let's just take a quick inhale and exhale. I'll be right back.
Have you heard of the financial law of gravity? Probably not, because it is one of Wall Street's best kept secrets. Why? Because the biggest trading firms in the world use it to make a fortune. It's also how I doubled my money in just 67 trading days. Interested? Want to find out more? Want to get in on the action? Click the button right now to join me and find out how I did it.
Coming back to you, Tom.
Man, I love that funky music. Yesterday, I was watching a big screen. I don't remember what I was watching. Maybe it was one of the local news channels, and all of a sudden, and I got to figure out why. My wife was listening to something in her Bose earphones, and it projected on the Bose, the big Bose system. I think that's the problem is that somehow there's some interference with the Bluetooth. And so all of a sudden what I'm watching comes out screaming at me, pump up the volume, pump up the volume. And so here I am, I'm trying to shut it off. I'm trying to, just a confusing state yesterday. Speaking of confusing states, let's go ahead and move into the confusion that a lot of people call cryptocurrency. So, Eric, we're going to start off with a little bit of news. So, guys, Bitcoin is, we've had a 20% increase, just under 20%, just in the month of July. It typically, if we move 20% in one direction, if we've trended and we move 20% against the trend, that is a technical reason that trend could be over. So if we've been in, and I believe we definitely have, a bear market in cryptocurrency, is it possible that we have now reversed course? Some of the news headlines might say that.
Eric? Yeah. We have Bitcoin due one of the greatest bull markets as July gains circle 20%. The future of Bitcoin price action may be much more bullish than the short-term charts, says Bloomberg Intelligence Mike McGlone.
All right. So, we talked about this, guys, and we've been talking about, what constitutes a bull or a bear market. And what Mike McGlone's saying is technically Bitcoin could be reversing course. And so, let's get into the technicals. Let's take a look and see what's going on with Bitcoin. And so on my chart, I've got a long-term, a 150-day chart of BTC. And this doesn't go back to the highest highs. And in fact, for that, I probably need to go to a 300-day chart. Let's just bring the 300-day chart up, and then I'll drop it back again. There's your all-time high. 67,549. I know some of you are going to say, no, Tom, it's 69,000. Yes, you're correct. But I look at closing highs, not spike highs or spike lows. So closing high, 67,549. Closing low, 18,954. Where are we at right now? 23.3-ish. That's a nice move. That's a nice move off that bottom. We're going to jump to that bottom in just a moment, but we're still well into the downtrend. Okay, when you look at this long-term chart and you see where this thing is gone, and then where it's come back, it looks like there's still some great buying opportunities here. That's the point I want to mention when you look at the big landscape. Now let's look at BTC once again on a 150-day chart, and then you're going to see that rally high. Remember, we were down at 20. I think we were down at 27,000 in January. It was a relatively low number, and then we jumped back up, and we got as high as 48,000. And we were looking at 50,000 as that next hurdle that we needed to get to. Well, never happened. And then we started that next move of lower lows. We hit the lower high. We were looking for a higher high, didn't get it, lower high. And what ended up happening was now we can see what a lot of us did not know, speculated, but did not know, that there was too much leverage in this market, that too many people were putting too many fingers in the pot when they didn't have enough fingers to work with in the first place, and they got taken out. And Eric, I'll be looking for collectible hats in this establishment, in this area. Okay, so I'm going to be looking for hats with some of these names of these companies that are no longer doing business because they over leveraged. And so, it really started happening, not just in June, but then we ran through that period of, May and June, ran through that period of May and June where we thought there was a potential bottom in. And then the news started coming out about a couple more bankruptcies. We also saw stable coins that were dropping, and it really pushed this market down. And you know what it did, guys? It did a financial flush of the bulls that were over bullish, overzealous bulls are now out of the markets. We tested a third time, which makes me want to jump to the 50-day chart, because you look at this, even this 150-day chart, high 47,445, low 18,954, and where are we at now? 23,310. We're still on the bear side of this move that we're looking at right now. I start to feel better when we get above 33,000. That's 10,000 points higher than we are right now. That's about a 50% move increase from where we are now. That's going to take some time. This is not going to spike up as fast as it went down. The bull takes the stairs, the bear takes the elevator. Let's look at a 50-day chart. Now, the 50-day chart is going to be a little different, because what it's going to show is it's going to show the bottom that occurred back on June 19th. It's going to show the bottom attempt, and even a third time that happened in both the beginning of July, and it also happened in mid-July. And then finally, we started to see these higher lows and higher highs. All right, Saturday, we actually hit 24,000. We hit 24,000 on Saturday. Oh, actually, Thursday, Friday, and Saturday, we were topping 24,000. A little bit of a pullback here. Where do we go from here? Again, we've got pullbacks that are going to happen in the 22, 21, and even high 20s, which would be healthy pullbacks for the moves that we've had. So that's Bitcoin. Now, what about Ethereum? We'll get to Ethereum in a moment. I know you've got another headline you want to show here, Eric. Let's talk about when flipping.
I sure do. Yeah, well, speaking of Ethereum, when flipping, crypto fans wager on Ethereum surpassing Bitcoin. Bitcoin's market value is still more than double that of Ethereum, and optimism is growing over long anticipated Ethereum upgrade. What do you think of that upgrade, Tom? Is that thing ever coming?
Well, it is, but what everyone's talking about here is, what they believe is that exponential future value of Ethereum on the network. And now I want to make sure everybody realizes this. Let's make this perfectly clear to all of you out there, whether you're with me on Monday Morning Live or whether you're with me on live streaming on YouTube. Let's make it perfectly clear that we're not talking about Ethereum having a price point that's higher than Bitcoin. All right. Some of you are looking at Bitcoin and you're 23,000. And so you're like, wow, Ethereum's going to surpass Bitcoin and be higher in price. No, we're talking about higher in market cap. All right. Market cap is, again, you take the price of the coin, you multiply it times the number of outstanding coins or tokens in the marketplace, and that becomes your market cap. All right. So market cap right now, Bitcoin's market cap is still double what Ethereum's is. But for Ethereum to pass Bitcoin's market cap, let's make it, Eric, we'll talk about this in the most the easiest way possible.
Sounds good.
Where is Ethereum at right now? Ethereum is trading just below 1,700. Look at my chart. This is the long term, or this is the 50-day chart of Ethereum. And we can see it came up to 1,725 before starting the slow little pullback here. But in order for Ethereum's market cap to double, the price needs to double. Price needs to double, now price may not have to completely double, because as if we have more Ethereum that hits the open markets, that's also going to move market cap. But let's just say, as easy as we can, market cap will double if the coin doubles. So if the coin got to 3,400, for instance, that is now going to double its market cap. Now, the way that Ethereum would surpass Bitcoin, the easiest way, is Bitcoin stays exactly where it is and Ethereum doubles in value and keeps going. Then Ethereum, we then see the flip in market cap. But Bitcoin's not going to do that, folks. If Ethereum goes up and doubles in value, Bitcoin's going to go higher. What we're talking about is if both of them are at a race to the upside, what has to happen is theoretically Bitcoin or Ethereum has to have a larger percentage increase day after day, week after week, month after month for that market cap to catch up to and ultimately surpass Bitcoin. I believe it could happen. I absolutely believe it could happen, but I don't see any area where Bitcoin goes down and Ethereum goes up for any more than a week or so at a time. These two guys run together, all right? These are, how do we call it? These are sisters. These are brothers from another mother. These are coins that are going to move together in one fashion or another. Yeah, so every once in a while, one goes up and one goes down. But if you put the charts on top of each other, they're pretty much moving in the same direction. It's just a matter of who's moving faster. Who's moving faster to the upside? Who's moving faster to the downside? Now, moving on. Here's something I saw that came across the news desk over the weekend. And Eric, let's talk about high-end watches.
Let's do it. The crypto collapse has flooded the market with Rolex and Patek. Top watch and trade.
The Patek Philippe watch, which is the most expensive of the watches out there.
Okay.
I'm a little bit of a watch guy. I don't have a big watch collection.
See, I don't even know the name of it, Tom. So I'm clearly not that big of a
Go Google Patek Philippe watches and check the price tag on some of those things.
I'll do that in a minute.
Rolex. Yeah, they're gonna make a Rolex look more like a Timex. But this is a top watch trading platform. It says the trophy model volumes jumped at Chrono 24. Chrono 24. I actually have that app on my phone. So because I do look at watches from time to time, and that is a great place to go to when you're looking for these watches. Now they're saying more supply hits the prices of Nautilus and Daytonas. Right, Nautilus and Daytonas are Rolex watches. So if you're in the market for a Daytona, I have a Daytona, love it. I actually have a Daytona with the rubber strap. And that's why I like it so much, because it has an element of sportiness to it. But if you're in the market for that, we've seen, because Bitcoin and Ethereum have dropped so hard, that it has hit the prices of these watches a bit. So check that out.
Tom, these watches are insane. I'm looking right now. There's one for $1.5 million.
Yep.
That's insane. It's just
to find a Rolex that's close to $1 million. You've got to go back and you've got to find the old 6163s. These are the Paul Newman Daytonas. Now those are rare, but that Patek Philippe watch, that is a rare watch too. You dig into that a little bit more, and you'll find out why it's worth that much money. And it's not just the way the watch has been put together, the complications of the watch. It's much more than that, but there is a rarity to those watches as well. How many of you in the room? Let's throw this out there. How many of you in the room when we said, when Eric went out there and said Patek watch, how many of you knew what we were talking about right away? That is a big in the watch industry. You got to be in the watch industry to know that name. Everybody knows what a Rolex is, whether you got one or not. But not many people know about the Patek Philippe watch, unless you're in the timepiece industry, which Mr. Turtle over there says, yep, because he worked in the industry. My father-in-law used to work for Bulova. And, these Italians, these old school Italians, Eric, everything they do is the best, and anything anybody else does is the worst.
True.
I mean, I have stories of my father-in-law that will go to me to the grave, where we laugh about these things over the weekend. I'm driving him around, this is years ago, and he's broken English. He's one of those guys that when he speaks in English, he doesn't use a lot of adverbs and adjectives, because no off-the-boat Italian does. They give you the what they want to say in the least amount of words possible. So I'm taking him to the bank, because he doesn't, he didn't drive. It doesn't drive anymore. Take him to the bank, and I said, where are we going? He's like, Bank of America. I said, okay. I bank at Wells Fargo. He asked me, he goes, what do you bank? I said, Wells Fargo. He goes, Bank of America is the best. I'm like, really? I didn't know it was a competition.
That's funny.
Because everything's a competition with him. My house is better than your house. My sliders on the back door are better than your sliders. You like McDonald's? Burger King is the best. And this is my father-in-law. But when it comes to certain things, like he likes Tesla, and he knows Rolex, but he doesn't know that Patek Philippe because he worked in Bulova. And guess what? Bulova was the best in terms of his, in terms of his industry. So sometimes when you put blinders on when you work in an industry where, that's all you know and all you do. You don't know what's going on outside that world. And so that's, the same thing in the watch industry or even outside of it. We think about the watch industry. A lot of us think about the fact that we look at, we know Rolex. That must be the highest, the most expensive watches. It just isn't true. All right, I'm moving sideways. Let's get back on track. Let's get back into our blinders. And what I want to talk about with everybody is I did something. I want to kind of move forward, and I want to show everybody a little bit more of why I believe we've hit that bottom for the year. Okay, and why I believe crypto is likely to continue rebounding. So last week, I shared a couple of charts with our microcurrency community. And I felt like, some of these are such high-level charts, it might be time to show them to everybody. So I want to share a little bit of this with you. And I like to call this the when and the where, or the where and the when, depending on how we go through this. So this was a chart of BTC. This was just a couple weeks ago. And I mentioned throughout 2022 that Bitcoin has basically been trading lock and step with the S&P 500. If you take a look at this chart, this is a chart of Bitcoin, and it is a chart of the S&P 500. And notice they're both moving pretty much together, and they're moving together. They've been moving together in July. So Bitcoin has been moving like an asset. And why shouldn't they, Eric? The IRS has already said they're an asset. So whatever the IRS says must be true. But that's sarcasm. Anyway, and I'm waiting for Bitcoin and Ethereum and the rest of the cryptocurrency markets to decouple themselves to the market. And I believe that will ultimately happen. So in the environment, BTC has been acting like a leverage bet of the broader stock market. So instead of having to go with power shares, QQQ, or some of these power indexes that are 3 and even 5 time leverage, getting into Bitcoin was literally doing the same thing. You had, the Bitcoin lost 57%, where the S&P lost 21, the NASDAQ lost 30. So you think of Bitcoin as a leveraged ETF, in a sense, for the stock market. So what we did was we looked at a couple of things. Was there a crypto bottom? And we wanted to review and dig a little bit deeper, and that's what we did. And we were looking for the when and the where. So let me get to what I like to call that the when, or the really kind of the when. Halving cycle has a lot to do with this. Now, when I first got started in Bitcoin, the rewards that were spitting out were 50 Bitcoins. When you solve the equation, ka-ching, you got 50 Bitcoins. When I got in, that was literally, we were getting a halving that was happening right then. So it halved to 25. So all of a sudden you were solving the equation and ka-ching, you only got 25 coins, which half to 12 and a half, which half to 12 and a half, which half to 6 1/4. This halving cycle continues and will continue over the life of the mining of the remainder of Bitcoin. What's important is that this is one of the most important drivers for BTC is the halving cycle. So about every 4 years, the reward gets cut in half. Right, reduces the supply for new coins that come onto the market. Now, what's interesting is, and I have this, and let me make sure I read it correctly. Without fail, BTC has rallied sharply after each and every halving, gaining thousands. Let me say this again: thousands of percentage points each time. Okay, and so that coin tends to bottom. Now we're talking about we're talking about thousands of percentage points after the halving. What about before? When does the bottom occur on the pullbacks? Because every 4 years, we've also seen Bitcoin and Ethereum and the likes pull back. Well, look at this. The last three bottoms happened 12 months, 11 months, and 17 months before its respective halving. So here's a chart that I shared with everybody on our microcurrency members list. So we had that rally up. We had the pullback that happened over 12 months. We had the pullback that happened over 11 months before the halving, 17 months. And here we are now. All right. We are looking at how many months. Where's the bottom likely to occur? If we take that 12-month time frame and then we flex it, let's say 3 months before and 3 months after that 12-month time frame. So let's go forward and look at, first of all, where's the halving likely to begin? The next halving is scheduled for April 2024. Now, you might be saying to me, Tom, why are we talking about this now? I mean, not 2 hours ago, I just saw Kenny Glick. He's talking about what's going to happen in the next 5 minutes or 10 minutes. Why are you talking about something that isn't going to happen for 2 years? Okay. April 2024. Let's back that up a year. Okay. Back that up a year. And then we see April 2023. Now, if we take 3 to 6 months on either side, and it looks like this is happening usually before the halving now, because the market's always ahead of things that we know. Instead of 3 months before, it's now 6 months before. It can be exponential. It's been happening exponentially. 6 months before April 2024 is what? November 2022, right? And the reason why we believe that it's happening before is because once again, when people find out something, a when, in this case, the when is the halving's going to happen in April. More and more as this happens, it tends to shift back what we call the ultimate bottom, or that cyclical bottom. Now, the next thing we talked about was the where, right? So where should this go? Well, what we also did was we overlaid all of Bitcoin's major drawdowns over the last few cycles, right? We see the 2015% drawdown. We got that 2011% drawdown, the 2018% drawdown. That's what we actually started Microcurrency Trader right before that 2018 drawdown and came right through that. That's why I feel really good about what we see happening now, which is potentially our bottoming, right? So we see that the other thing that's happening is, as Bitcoin is maturing, the drawdowns are happening less and less. So 85% down in 2011, 80% down in 2018, a little less than 80 in 2011, 2015, 2018. Here's our next one. When's it going to likely happen? Sometime, I'm thinking this is going to, if it hasn't already happened, between November and the beginning of 2023. So if that's true, and we've already seen our drawdown, which is very likely we could. We talked about the when, we talked about the where. Basically, it summarizes like this. All right, until then, we could get volatile. The most volatile range we have is between 10 and 20,000 in the second half of 2022. But I believe that has already happened because we've dropped in between that 10 and 20,000. 17.5 is the sweet spot. We got very, very close to that sweet spot just, 6 weeks ago. All right. Now, I want you to think about reward and risk. The reward of the market right now, trading in the 23 area, that could go down another 10,000. Sorry, the risk. Drop another 10,000. The reward to 100,000. You're talking about, again, a drop from, say, if you drop 10,000 in points, right? Your drawdown is 10,000, but your upside could be, count it off with me, 30, 40, 50, 60, 70, 80, 90, 100. There's an 8-to-1 reward to risk ratio, or let's call it 7-to-1. 7-to-1 between where we are now to where we believe risk is, and where we are now to where we see the next area of reward, which is 100K on the coin. Okay. So at this point, Eric, You got a couple questions. Let's bring up some Q&A here as we head to the last 5 minutes of the show.
Sounds perfect, Tom. How about this one? Someone just wants you to take a look at, a new member, of course. YFI. You mind taking a look at that one?
Let's take a look at Yearn Finance. This is one that we've traded several different times, and take a look at what Yearn Finance has done in the same time frame. You've got that low now. Think about Bitcoin for a moment. This is why I like microcurrencies. This is why I think microcurrencies are so important to look at as a trading vehicle, because Bitcoin's gone from a low of let's call it 17.5, so it's up about $5,000-$6,000 right now. Take a look at what Yearn Finance did. Its low was 4,369. It hit a high of 14,000 2 days ago before pulling back, and it's looking really strong. Guys, Yearn Finance is a coin, I think, that only has 28,000 total coins, not 20 million, or not 64,000. I think 64,000 is the number on that, but it's such a small amount. That's a coin that's going to giddy up and go with this market moving. We had this coin. We actually ended up having this coin at one time. I think we ended up buying it around the 40 to 50,000 mark, and we were out of it at around 80,000. That's how high this coin was. A $90,000 coin last year that dropped. I mean, it had a huge drop all the way from 90 down to 4,500. That's a 95% pullback. So yeah, coin's on the move right now, and I like this coin as a tradable coin. So how about one more, Eric?
Sure thing. I have another one right here for you. This one's from Grateful Granny. For us newbies, what is the break-even point on Bond?
BOND.
Mm-hmm.
All right, so take a look at Bond Bridge. So Bond Bridge is a really interesting one. This coin came all the way down to $2.34. It hit a high, and look at the moves on this one. I mean, we've gone from 231, we hit a high, all the way up here, and the move was quick. We went from 2.5 up to yet a 10x move, almost a 10x move in the period of how many days? 3, 6, 9. 9 days, 10x move on Bond Bridge before pulling back. All right, so in the area of where we're looking at this, again, what is the break-even point on Bond? The answer is wherever you purchased it at. If you own it at 234, which I don't think anybody here does, let's say you own it at 5, your break-even's 5. If you own it at $20, your break-even's 20. If you own it somewhere in the middle, if you own it around 10, which is really close to where it is right now, that's where your break-even is. Your break-even, unlike options, your break-even on cryptocurrencies is exactly where you paid for them. Now, how do you reduce your break-even? With cryptocurrencies, it's very simple. You buy into that move. So if you own it at, let's say you own Bond at 20, and you went in and bought some more at 10, you've now lowered your break even. If you own 100 at 20 and you own 100 at 10, you've reduced your break even to 15. So that's a little bit more on break even itself. All right. So we are getting to the end of the show, folks. And I want to mention to you, if you want to know how we trade cryptocurrency with the microcurrency members, right, then consider becoming a premium member. Guys, I'm going to tell you, we are now starting to see more and more buy recommendations popping up as trades, not investments, but trades, all right? Trades in the cryptocurrency world. Those of you that are microcurrency members, typically, we start our sessions off every Monday at 1 p.m. I got a doc appointment today. I'm sorry, I got to take this one off, but I will let you know, those of you microcurrency members, I do have a watch list that's going out to you today. So all of you microcurrency members, check your email. For everybody else, I'll be back here again, same time, same place tomorrow. Till then, have a great rest of your day, and we'll see you then. Bye, everyone.